Hi everyone, my name is Alina Freire and I'm a realtor with Coldwell Banker here in Miami, Florida, and today is Real Estate Wednesday. So it's important to have as much information as possible when you are purchasing or selling a home. And one of the most important processes is the appraisal. So what exactly is an appraisal? Well, an appraisal is basically a opinion of the home's market value based on recent sales in the neighborhood. When you're applying for the loan, the lender will request the appraisal and will hire a licensed appraiser to come in and appraise the home. Usually the selling agent and the buying agent both will have some sort of comparison that they've already done, that they hopefully have shared with you, and this would kind of give you a little bit of a scenario of what the appraisal should come in at. So why do lenders require appraisals? Well, this is basically to protect their investments. If they loan more money than the actual home is worth, then they won't be able to sell it if the borrower forecloses on the home or defaults on their loan. So now that this appraisal is completed, what are the next steps? So basically the appraiser will go ahead and work on the appraisal, and they usually take about 72 hours. It really depends on the bank. And they will submit that to the bank. The bank is the actual owner of the appraisal, and usually only the buyer is privy to the appraisal value. At this point, there could be three options that happen. One, the appraisal comes in exactly at the purchase price of the home, which is great. At that point, really nothing needs to be done, and you can continue on with your loan. So what if the appraisal comes in less than the actual purchase price? At this point, you have a couple options. One, your realtor can actually go back to the seller's realtor and try to negotiate down the difference, really depending on the difference. If the home is valued a lot less than what you actually have on the contract to purchase the home for, you could either negotiate like I stated before, or you could walk away from the actual contract, because at that point the lender is only gonna loan you up to the value of the home. So for example, if the appraised value comes in at $350,000, but the purchase price was $375,000, that's a $25,000 difference that you would have to come out of pocket with. Most people wouldn't want to do that, because why would you want to pay more for a home than the actual market value of the home? But you can negotiate, you can meet in the middle, there's a lot of options that you can do. Just know that the bank will only loan you up to the valued amount of the home. So what happens if the appraisal comes in above purchase price? This is actually a win-win scenario for the buyer, because not only will you be going into the property with more equity than you expected, depending on the amount of down payment you originally were giving to the loan, you may be able to even reach your 20%, allowing you to remove the PMI insurance from the monthly payments. So for example, let's say the home purchase price was $350,000 and you were giving down a down payment of 15%, which is a total of $52,500. And the appraised value comes in at $368,000. So that's basically the 5% difference that was missing to equal 20%. That is a great scenario. A lot of times if your realtor does their homework and the seller's realtor does their homework and does an internal appraisal of the property, you usually don't get that lucky, but you never know. So I hope this information was useful to all of you, and if you're in the market to purchase or sell a home, remember to start with a realtor that not only knows the market but also the process. Until next Wednesday, my name is Alina Freire with Coldwell Banker. Have a great Wednesday.